I was wrong, and I need to own that completely and publicly before we talk about anything else. A few weeks ago, when silver was sitting at $85, I told you it was a buy. I said the floor was in, the worst was over, and that $100 was just around the corner. I was confident, maybe too confident, because what happened next humbled me fast. Silver didn't go to $100. It went to $80, then to $76, then briefly touched the low 70s before bouncing. If you bought at $85 on my call, you were underwater fast. And that is on me. I got that direction right eventually. Silver's back near $88 today. But I got the timing wrong. I underestimated the volatility, and I did not warn you loudly enough about the risks. That stops today. So let's talk about what I actually got wrong, why I got it wrong, and more importantly, what the data is telling us right now for the weeks and months ahead. The first mistake I made was ignoring the paper market. I was focused on fundamentals. Supply deficits, solar demand, the weak dollar, and those fundamentals are all real. But I did not pay enough attention to what was happening on the COMEX. Analysts identified a 21-to-1 paper-to-physical ratio on silver contracts, meaning for every real ounce of silver, there were 21 paper claims on it. Kitco. When the CME raised margin requirements, all those leveraged paper positions got wiped out simultaneously. It didn't matter that the fundamentals were strong. A margin call doesn't care about solar demand. It just sells. And that is what happened. The second mistake was thinking $85 was a floor. I had no technical basis for that. It was a round number that felt safe. It wasn't. The real support zone was $70 to $94, and silver tested the bottom of that range hard. Finance magnates. I should have told you that. I should have said, this metal can move 40% in a week, and if you can't stomach that, don't touch it with money you cannot afford to lose. I didn't say that clearly enough. I'm saying it now. So what's the brutal truth about what's coming next? Here it is. The bull case for silver is actually stronger today than it was at $85. Not because the price is higher, but because the shakeout happened. The weak hands got washed out. The speculative froth got cleared. What's left is physical demand that isn't going anywhere. Gold Silver's lead analyst, Alan Hibbert, expects silver to trade above $100 in 2026 as supply deficits deepen and industrial demand accelerates. Many analysts now see a clear path to triple-digit silver, especially after the metal surged 147% in 2025. JP Morgan. JP Morgan sees silver averaging $81 per ounce in 2026, more than double its 2025 average. Long forecast. And that's the conservative institutional call. Bank of America's bull case goes all the way to $309. CoinCodex's algorithm projects silver reaching $234 by the end of 2026, a 176% increase from current levels. CoinCodex. But here's what the bears are saying, and you need to hear this too. JP Morgan's own analysts are warning that the silver market remains vulnerable to corrective pressure, especially if prior price rises were driven more by speculation than real industrial need. Finance magnates. And there's something else that worried me when I read it this week. The Silver Institute expects global silver industrial fabrication to actually decline by about 2% in 2026, partly because manufacturers are using less silver per unit in solar panels, a process called thrifting. Finance magnates. If solar manufacturers keep reducing how much silver goes into each panel, that changes the demand story. Slowly, but it changes it. There are also 3 metrics every silver investor must watch right now: real interest rates, global manufacturing activity, and the pace of renewable energy expansion. If inflation cools and rates stay high for too long, silver prices will lag. Fortune. So here is where I land today, and I'm going to be straight with you. Technically, silver needs to break and hold above $94 to confirm the next leg up. A clean break above $94 opens the door to a retest of the all-time high at $120, with $136 as the next Fibonacci extension target. Finance magnates. Until that happens, we are still inside a consolidation range. We are not in a confirmed new uptrend. We are recovering. Silver is trading in blue sky technical territory above $80, where there is no meaningful resistance on the Western chart. Kitco. That's actually bullish, but it also means we have no historical reference points. We are in uncharted territory, and uncharted territory cuts both ways. My updated view is this. Silver between $85 and $95 right now represents a reasonable long-term accumulation zone if you have a 12 to 24-month horizon, a stomach for volatility, and you're sizing your position accordingly. Not 50% of your portfolio, not borrowed money, a measured position that you can hold through another $20 drawdown without panic selling. If you bought at $85 and you're still holding, I think the long-term thesis remains intact, but please do not add more just because I say so. Watch $94, watch real interest rates, watch the Fed, and if silver breaks back below $75 on volume, that changes the picture entirely, and I will be the first to tell you. I was wrong at $85. I'll be wrong again at some point. Every analyst is. What I won't do is pretend otherwise or bury my mistakes in the comments. If you're watching this channel, you deserve honesty more than you deserve confidence. That's the brutal truth. More updates as the week develops. Stay sharp and stay sized correctly.